10-year note yields made a big spike higher following the results of last night's U.S. election. We saw yields get all the way up to 447. That's up 20 basis points from yesterday's close, but we're seeing a modest pullback. Now, that 447 level is the highest yields have been since July 1st. But as I said, we did see a modest pullback down to 444, still closing up 16 basis points on the session. And that's the biggest one-day move since April. So a lot going on in yields as we've seen them move higher since the middle to end part of September. Right around September FOMC, they've made huge strides higher. And again, continuing that after the U.S. election results came out, again, seeing a move higher towards 447, closing out at 444, up 16 basis points on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll see volatility made a reversal lower. So we came off those year-to-date highs. We're still hovering at around the midpoint of the year. It's interesting to note that despite the fact that the election is in the rearview mirror, tomorrow we still have FOMC and we'll get a press conference from the Fed chair. So still some event risk on the calendar as we look forward, but volatility making a big move lower as election results came in. Lastly, let's talk about what we do have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. We get non-farm productivity, and then we get consumer credit in the afternoon. But the big obvious number tomorrow is going to be FOMC, where the market is expecting them to cut 25 basis points. But it's all about the press conference and any sort of guidance the Fed chair will give us after last week's weaker employment number, as well as all other data points in between. So it'll be interesting to hear from the Fed chair himself after FOMC. So 10-year note yields after a big move higher, again, trading up to 447, the highest since July, before pulling back and closing at 444, ahead of tomorrow's claims, non-farm productivity, consumer credit, and the long-awaited November FOMC, where the Fed is expected to cut 25 basis points.